Okay, welcome back. You're with us here on the CNBC-TV18 Motilal Oswal studios. We're just kind of going into the pre-open session. The first rates will be on your screen in just a bit from now. Let's just take a look at what the picture is on the SGX. We've been getting you the trades, of course, on the technical side. Let's get some futures and options trades as well. We have Rajesh Palvia, Vice President Technical and Derivative Research at Axis Securities, join in. Rajesh, good to have you with us here. Thank you very much. 7 days on a trot, the market's done very well. Yesterday, especially on many intraday charts, you saw signs of reversal, some exhaustion, first signs maybe starting to show through. Maybe nothing, maybe the market will move on. What is your own way of trading the market from here on?
Good morning, Prashant. Yeah, definitely. We have seen a strong recovery in most of the sector from their recent low, and Nifty and Bank Nifty both have witnessed the short covering in the previous trading session. And looking at the overall scenario, we believe that both the indices now in the bullish trend for near term to short term, as the both index now scale up above 20-day, 50-day moving average. And looking at the data setup, 17,500, 550 is the important support area now for a Nifty. So any minor corrective action is a buying opportunity for Nifty, and we are projecting target of 17,850 in the continuation of this uptrend. Just to play this up move, we are initiating here to buy call option of 17,700 strike, which was closed at around 70 rupees. We are projecting target of 120 to 130 on the higher side. One can keep a stop loss of 45 to buy this call option. On the Bank Nifty, we believe that this momentum can continue further higher towards 41,800 to 42,000 also, as we are comfortably holding 41,000 level also. The interesting part which we have observed, that is most of the automobile stocks now started recovering from their corrective move. So we believe that this automobile sector can be looked at in this recovery which we are seeing in the market. And that sector can, start, recovering from here onward. And some of the stocks are looking very attractive. From that space, we believe that, Bajaj Auto has given a clear breakout. So one can look at Bajaj Auto also to buy for upside target of 4,300. One can keep a stop loss of 4,120. Another stock which we like from other sector, that is metal, and JSW still is looking very interesting. Almost a consolidation breakout of 5-6 weeks. And looking at the short covering in the previous trading session, we believe that this momentum is likely to continue in today's session also, and upside target can be around 735 to 740. One can keep a stop loss of 702 to buy JSW Steel also.
Okay, thanks a lot for joining in, Rajesh. We appreciate your thoughts. That's Axis Securities with their views. Let's now get you some exclusive conversations. We caught up with TV Narendran, the Managing Director of Tata Steel, on the sidelines of the AIMA Awards, who said that despite global headwinds, Indian economy is looking good because of the focus that we've done on infrastructure. Let's listen into his views. We'll come back.
I think, globally, of course, there is some concern because of the fragility of some of the economies. But I think the Indian economy, because of the focus on infrastructure, is looking good. Steel consumption, in my view, should reflect the GDP growth rate. So if we say the GDP is going to grow at 6.5–7%, I expect steel consumption to grow at least that. Our growth will be dependent on the capacities that we build. We are in the middle of a 5 million ton expansion, which should be completed during this financial year, but obviously we'll get the benefit of that in the next financial year. So, well, Europe continues to be a bit of a challenge, though things have improved because gas prices in Europe have come down, electricity prices in India have come down, steel prices have improved. So certainly things are looking better. We have also a challenge because we are realigning one of our blast furnaces in Netherlands. So that's going to play out during this quarter as well. But I think certainly we expect the second half of the year to be much better.
Okay, all right. Mr. Narendran expects the second half of the year to be much better. So let's see how that goes. But to help us out with a quick analysis on the metal space, we're joined by Vikas Singh, VP Metals and Mining at Phillip Capital, who joins us on the show. Hi, Vikas. Thanks so much for joining in. Vikas, yesterday, Sunday, I saw a big spurt in steel stocks. We're wondering what's going on there because data coming out from China was rather mixed. What would you attribute it to? Coking coal costs lower, expecting volumes to pick up from here on? Could that be the reason?
So that is also happening. But if you look at one of the data is basically the Chinese property market data. So year on year, January, the second-hand home sales was roughly about 60+% up. So that has given some expectation on the real estate recovery in the China. That is one of the reasons why the property market developers were also up in China, and gradually this flowed into the steel guys also.
Okay, so property market revival is something that's egging those companies on. Because in terms of your picks, I'm just looking at the note, the inputs that you have given us, and I believe you like integrated players. So what would the preference be out there? The two integrated names normally we look at is Tisco, Tata Steel, as well as SAIL. What's the preference between the two?
Our preference for SAIL is higher than Tata Steel because Tata Steel still got some problem with the UK basically. UK to be more precisely, that's the plant which is bleeding them, and probably this quarter also they would continue to suffer there. SAIL, on a contrary, would benefit from this fall in coking coal prices more than anybody else because of the inefficiency which sales usually command, plus the volumes are higher. So our preference for in integrated plus SAIL is higher and followed by NALCO.
SAIL followed by NALCO. Got that. Vikash, good morning. From the stainless steel space, you like JSL, and I was looking at the trajectory there. It's been a really solid performance, right? I mean, in July of last year, the stock was, I think, 100 rupees, and now it's almost touching 300. Do you see a lot more upside here, and what could be the rationale for it?
Yes, we still do some upside from there because, see, the last rally, if you see, the initial rally was because they were coming out of the CDR. But now what is happening that their new blast furnace, new EAF furnace is almost ready. So going forward for next 2 to 3 years, you would see a consistent volume growth of 22%. That should drive the cash flows as well as the valuations going forward.
All right. Vikas, I wanted to ask you about JSW Steel. It's not totally backward integrated, but yesterday that stock was one of the big gainers out there. The volume numbers, they delivered some growth in the past year. It was a little lower than their guidance, but I think you all had already factored that in. What's your view on JSW Steel? Valuation-wise, it's relatively more expensive, but how do you view it from your on?
So one thing you also have to see the volume growth expectation or the potential for the company. Right now, if you look at the most of the large scale company, JSW has one of the largest spare capacity which is there. So they are already at 27 million tons kind of the capacity, but production is much lower. So without, even if they don't incremental capex, they would still be able to ramp up the volume. So valuation is, yes, a little bit higher, but they are the most efficient one, and incremental volume which is coming from the brownfield would be a better ROI business than the rest of the lot.
Okay. All right. So, but what is your current rating on the stock? JSW Steel, we get that. If there is volume growth that has to come about, they have capacity. What is your current rating?
So, in 3Q result, at around 760 rupees, we have put up a sale rating on the stock. But we are no longer negative on the JSW Steel at this point of time. We think that most of the fall in the steel sector has already happened. And few stocks are at a pretty attractive price. So JSW, probably we would put a neutralish kind of the rating. Should be a range bound between 7 to 750 rupees.
Okay, 700 to 750. That's where the stock is currently at. All right. In the non-ferrous space, you mentioned earlier that you like NALCO. But what is the call on Hindalco now for the long term?
So Hindalco lacks a near-term figure, but there is a gradual recovery in Novelis. So I believe that with the recovery in Novelis and as every quarter they keep on improving, the stock should perform. We don't see Hindalco below 400 because at that price, almost the worst performance of Novelis is already factored in. So downside risk reward is pretty favorable in Hindalco, but yes, it will take time in terms of the giving gains to the investors.
All right, Vikas, final question. NMDC Steel. What's the view out there? You know, the market capitalization is around 10,000 crores. One would say that is very cheap for a 3 million ton plant. The problem is they have a debt of close to around 5,000 crores as well. And for the plant to stabilize, it could take some time. At around 32, 33 rupees, what's your view on the stock?
See, the rally which we have seen recently in NMDC Steel was largely because of the news, and there are expression of interest to buy the assets. If nobody buys it, for the NMDC itself, it's difficult to run this mill and become profitable. So within next 1.5 to 2 years. So incrementally, we don't value it more than 12 to 13,000 crore kind of the thing. So another 15-20% kind of the upside could be there. But at this point of time, we are not very gung-ho on NMDC Steel's prospect until and unless it has been acquired by somebody, some private company. They would have the capability to ramp it up faster, even increase the capacity from 3 million ton to 6 million ton, for which the land bank is already available. In the hands of NMDC, it would still take more time for this company to turn around. So in the near to medium term, not very positive on this stock.
Okay, got it. All right, thanks a lot for joining in. So that's on the metals, but let's get back to the overall market now. The pre-opening rates have settled higher, so looks like it's going to be another day of gains for the index. The Nifty is piling on about 40 points. Sudarshan and Mitesh are back with us. Sudarshan, what's the big call? If the market does extend its rally, what would you do? What would the stop loss be? And what's the big call at 9:10 now?
See, the stop losses are very wide, 17,400, because this is a positional trade. But I would look for sharp intraday dips today and go long. You must be long when the market closes. Bank of Baroda is a buy with a stop under 165.
Okay. Mitesh, what about you? And please do run us through your earlier trades as well. We missed on those.
Yeah. So as I said earlier, I think I have 3 buys and a sell. ABFRL, if it clears yesterday's high of 223.5, buy with a stop at 217. Look for targets of 236. Kotak Mahindra Bank on a mild decline, say around 1830-32. Buy with a stop at 1800 for a target of 1900. And ICICI Bank is a buy with a stop at 869 for targets of 910. MCX is a sell, a conditional sell below 1455, go short with a stop at 1475 for targets of 1410. And the top pick for the day would be ICICI Bank, keep a stop below 869 and 910.15 is the target area.
Mitesh, on the Kotak Bank stock, I mean, yesterday came off quite a bit from the high point of the day, right? But you're saying buy around 1800 if you get a bit of a dip.
1830 Prashant is what I recommend as a buying zone, and 1800 is the stop loss. There was a big gap, and I think, yesterday, before this, the stock had rallied from below 1650 to about 1800 plus. So with the gap up, I think there was some profit booking. That's why it came off a little bit, and that can happen today as well. But it's a buy clear.
Okay, thanks for that. Well, let's go across now to Nimesh. He has a standout brokerage report of the day. Nimesh, what are you looking at?
Hi, morning, sir. So today's standout is on AMC's. Boffa Securities is turning bearish, and they've cut the earning estimate between 2 to 13% across the listed AMC stocks. Now, today they've downgraded HDFC AMC to neutral from buy, and there they've cut the target price to 1950. They've also downgraded Birla AMC to neutral from buy, and there they've cut the target price to 370. And they've downgraded UTI AMC to underperform now from neutral, and there they've cut the target price to 645. Now, the key reason for the downgrades is largely multiple headwinds, regulatory headwinds to the margins for these companies, and the key recommendations which have been proposed by the regulator, which includes TER to include GST brokerage and STT, uniform TER across schemes, and removal of additional expenses. Now, without offset, BOFA believes that this all cumulatives can add to a 30 basis points impact, and that could be a big risk to the earnings downwards going forward. So on back of all this, they're turning bearish on the sector, and they've downgraded all the 3 listed AMCs, especially HDFC AMC and Birla AMC to neutral, and they've downgraded UTI AMC to underperform, and sharply they've cut the target price as well as earnings between 2 to 13%.
Okay, talking about downgrades, there are some that have come in on the auto space as well. So it looks like it's a day of downgrades. Eicher Motors has been downgraded by Macquarie this morning to a neutral. They've lowered their target price on Eicher Motors to 3,258, which is well above the current market price, by the way. They've cut their FY24 and FY25 earnings estimates. Now, the rationale for the downgrade is the weakness in the commercial vehicle sector. So they say that the commercial vehicle cycle is moderating, and now they've factored lower multiples for the CV business and a higher discount to larger peers like Ashok Leyland and Tata Motors. Now, Macquarie has also written a cautious note on Hero MotoCorp this morning, where they've maintained a neutral, but they've lowered their target price to 2640 on Hero MotoCorp. They say that Hero Moto is still trading at a 20% discount to its 10-year average, and there's a reason for that. The discount reflects the market share loss in the core motorcycle business, and now there's increased competition from players like Honda in the 100cc segment. They've also seen limited success in the premium motorcycle space. Margin pressures are led by increased competitive intensity, and they're just unable to move forward in their electric vehicle business either. So, those are two, cues that have come in on the negative side for the auto space. But getting back to the markets now, I think we're just all set for market opening in a couple of seconds. Looks like it's going to be a good opening. Remember, it's been 8 days of gains that the Nifty has seen, and FIs have also been buying in the cash markets for 8 straight days. All eyes will be on the tech sector, of course, as TCS comes out with its numbers later in the evening. The stock is up almost about 0.5% in anticipation of the numbers. Also, as the metal analyst earlier was just pointing out, JSW Steel is one stock that could see more traction. In fact, it is one of the big Nifty gainers this morning, so we'll keep our eye out on that as well. Lots to track and trade today. So here goes the first tick on the index. It's positive, 30 points higher on the Nifty. The Sensex is up about 80 odd points. The Bank Nifty is flat, but looking to build on to some of its gains. What's gaining today is Divis Labs. I think it's had a really rough ride this year. It's down 15% for the year, so trying to recover over there. SBI Life, JSW Steel, Adani Enterprise, a motley bunch of stocks actually on the upside, but metals are looking good. So there's JSW Steel, there is Tata Steel that's up in the green as well. Hindalco is up in the green, so that space is not too bad. Apart from that, autos are making a bit of a comeback, Bajaj Auto, Hero MotoCorp, but some of them struggling because of the downgrades. We'll talk about that. Tata Consumer Products, Cipla, Grasim, a couple of other names that are in the green. L&T has been hitting new highs daily, so it's putting on some more weight. Keep an eye out on that. But Divis is really the big one, up almost 2.5%. On the downside, IndusInd Bank down about 0.6% for reasons obvious. NTPC, Kotak Mahindra Bank, Infosys ahead of its numbers tomorrow is under a bit of pressure. Nestle as well down about 0.2%. Apollo Hospitals just a tad bit in the red, and Bajaj Finance too a tad bit soft this morning, so keep an eye out on that. But very quiet opening, you'd have to say, just about, struggling to build on to its gains further. 17,730. Sula is really the stock that's piling on the gains this morning, 6% higher. Nigel will talk about that, but flat opening for the market.
Well, that's right, Sonia. Let's pull up a couple of stocks, though. We have Sula that's up and about in today's trading session. It's up close to around 5.5% odd. But Delta Corp, the street had positioned itself for a weak set of numbers. The numbers were quite subdued as well. Business-wise, well, things could look up. So because of that positioning, actually, we're not seeing a negative reaction. The stock, I think, is in the F&O ban as well. So it's seen a fairly flattish start to kickstart trade. A couple of other notable movers. We had large trades yesterday. Were seen on Venus Pipes, where you have Mr. Ashish Kacholia that picked up a couple of percentage points in the company. So Venus Pipes, it has a bit of a discount in comparison to Ratnamani Metals, which is its larger peer. So that stock's up close to 2.5%. Sagar Cements, well, you had a big fund coming in there. ICICI Prudential, they went and bought that 4.5% stake. So that one opens up with a gain of close to around 2%. And Delivery as well, there was a large trade when Internet Fund PTE, that's Tiger Global, they sold close to around 1 crore shares odd. For the time being, seeing a bit of a relief rally. A few more stocks that are on focus. We have the management of Titagarh Wagons. They said that in the coming years, because of these order wins that they've had and the order win that they just announced with BHL, they'll be able to grow in double digits and margins in that vicinity of around 8 to around 10%. So that's up close to 2%. And also a couple of other names. Time Techno. Late last night, there was an order win that they announced on the exchanges. The order win comes in from IGL to supply CNG caskets for around 50 crores, smaller quantum, but it opens up, a new trajectory in terms of growth. So I think the street likes that. That stock is well up, close to around 3.5%, Prashant.
16 points on the Nifty now, 17,739, 17,740 odd. So this is a quiet way to start, another day, 7 days on a trot. The market's done well. Quiet day wouldn't hurt. Well, Adani Green is up about 3.5%. It's a top volume-led gainer on the screen. Adani Total Gas is up about 2%, 972, beg your pardon. Divis Laboratories is up 3.5%. That's a big one. A big difference.
A bit of a shock there.
Yeah, Divis is up 3% or so, 3,018. Sula, we were talking about that one, 5% on Sula, 371. Venus Pipes is up 3%. Titagarh, went up above 300. It's sort of just under that, but it's up $10 from yesterday's closes. Nigel also pointed out Prince Pipe is up 5%, 614 on Prince Pipes. Time Technoplus we highlighted. Dwarke Sugar is up about 2.5%. HEG is up about 2.5% as well. Market breadth is comfortable, 2:1, a little over 2:1 right now. Kotak Bank saw that big move yesterday, and this morning Mitesh told us buy it around 1830. Stocks at about 1835. It's down 0.5% or so. IndusInd is down 1%. Zomato is down about 1%, only highlighting things with volumes at this stage. We've got Shilpa Medicare down 3%, 260 on Shilpa Medicare. Neogen Chemicals, that was a big mover, 2% lower. Chola Finance is down 1%. I mean, on the downside, there's not very much big at this point in time. I mean, I think there is more happening on the upside, even on a flat start like today, what we have. 5.6 points on the Nifty, 17,730 is where we are at. Atul Suri is our market master of the day. He's joining us right here in the studios, Chief Executive Officer at Marathon Trends PMS. Atul, good to have you with us here back in the studios. Thanks very much.
Morning.
I mean, we've had this rally, nice rally for the last 7 days or so.
7 days.
So, is this the start of a bigger move, Atul, in your view?
See, as I see it, Prashant, there are three trends broadly. There are uptrends. Everyone's happy, good about it. It's very visible. You have downtrends, nobody's happy. And you have sideways trends where we are all confused. And I think we are in that space.
I see.
I feel that this sideways or consolidation is not just in India. It's global. If you look at US markets, if you look at the S&P 500, because that's how I call that mothership, it's kind of where it was a year ago.
3,800 to 4,100.
Absolutely. 4,200 is a breakout. It sort of gets you there and then it kind of deceives. So from that point of view, that we are in a sideways trend. The thing is, we are not used to seeing sideways trends for the last 10 years, thanks to the Fed. Each time global markets had a problem, you had interest rate cuts, money was thrown in. And now that is not there.
It's actually exactly been 10 years, because the last sideways market, extended sideways market we saw was between 2010 and late 2013, right before the Modi rally, right?
Absolutely. So these are very frustrating times, as they are today. Like, you would see up, US Dow is up, so we should be up 30 points. And when you open the market, nothing's happening. And the stocks you were mentioning, hardly, you didn't even have to have conviction. Right? It doesn't inspire any confidence because there was some volume. That's what you said. Can you imagine? So that's what the state of the market is. And these tend to be long, painful. However, the fact is that these are also very stealthy. When these turn around, just as in that phase, it creates a monstrous bull market. But before that, it will frustrate everybody. It will tire everybody. And when it happens, there's skepticism, there's doubt. Then people keep waiting for corrections. So when I look at global markets, I see that they're going through this kind of phase. This is also happening in the US. But the silver lining, see, I am bullish. I have much larger targets. It's taking some time. The reason is what I do in such times, Prashant, is I look at something called a 52-week high, 52-week low ratio. So even last night, US, it is a 10:1 52-week high versus 1 52-week lows. So there's not much you can do with the index, there's not much you can do with the direction, but in that also there are a lot of stocks. You can still make money in sideways market if you are in that space which is kind of breaking out on the upside. Also very often, as I said, nobody knows when the market as a whole breaks out. You'll find that the leadership that is visible today will actually lead the next bull market. And that I feel is changing big time. Like in US also, if you look at it, it is the industrials. And if we don't have industrials per se as a sector in India, but if you drill down, even today you will see that the stocks hitting 52-week highs are more in that category.
Absolutely. Like the L&Ts of the world are looking pretty good.
Absolutely.
But how starved are we of this market rally, right? I mean, he started by saying a rally in the last 7 days. I think after a painful period, even 7-8 days of an up move seems like a rally. But how do you think this is going to end? Do you see this consolidation phase end with a big upside, perhaps in the latter half of the year? Because that is one narrative as well.
See, we cannot time it. Very often these also give a lot of false breakouts. False breakouts is that, okay, it looks like a certain level is broken out. Like, let's say I take, 17,800. I'm just giving you throwing you a number. It will deceive. So, as I said, pain and time are a part of it. So, you can actually never time it. But the fact is that those who survive it, and more importantly, what I was saying, Prashant, the leadership, that actually tends to be very rewarding. I can take you back another time, 2002, 2003. Why I'm saying that is that the themes or sectors that are leading or breaking out today were also the themes and sectors breaking out then.
So where do you see the leadership come from now?
Absolutely. That's the next question. Your capital goods, engineering, infra. These are sectors nobody touched. You spoke about L&T. What has L&T done for a decade? Nothing. It's been a lost decade for the stock. But the fact is that you cannot ignore such stocks. So very often what happens is that you will find that early breakouts or stocks that even are doing well in sideways markets very often lead the next bull market. Now, will this consolidation be W-shaped, U-shaped, L-shaped? Honestly, Sonia, we don't know, because there are so many moving parts. And even I tend to believe that, I was in fact expecting the market sometime in Jan, Feb, and, we've shared it. I was expecting new highs and it was roaring because India was outperforming. But I think we've taken a hit. I feel that the whole Adani issue also has taken the shine of India because, India was a big time outperformer. In fact, we were the only market hitting 52-week highs or lifetime highs for that matter. But you will notice that around 18,200, this is also where the budget was. We had a great budget. And you will find that the shine of India as a relative outperformer has also kind of gone. So I do think that we are also taking our time-wise corrections, but opportunities.
That's only right, because I was looking at some numbers from the lows of COVID,
right,
across asset classes.
Right.
India ranks. This is including Bitcoin and whatnot, right?
Right.
India is still right up there in terms of returns.
Absolutely.
Absolute returns from the lows of COVID across markets, across large markets and asset classes. So some time correction perhaps is...
Absolutely. Because look at December, Prashant. We were at 18,800 plus something, almost 18,900. And a lot of other markets were making 52-week lows. Correct. And that's when you understand that, that whole relative outperformance was massive. So India cannot just be, you have something called the tall poppy culture. That whichever poppy grows, that gets chopped off first. So to some extent, when nothing is happening, people were not making money anywhere. They had to book in some market where they were making money. And I guess we are going through a time-wise correction. It is frustrating, volumes will be low. But as I said, the silver lining is that what I do is look at 52-week high versus 52-week lows. This is what internals of the market are. And that's where you'll find sectors and themes. These sectors and themes not only make money for you in the short run, but I feel they become very big leaders of the next bull market. And this is a great time to actually do that, to do that transition in your portfolio. Most people are sitting with the leaders of the last bull market. Every bull market throws new leadership.
Right.
And in such times where there is no massive price moves, I think it's an excellent time to, churn. If you churn, I guess the next phase is favorable, or that's where you get outperformance. If you don't, you will say that, okay, the market's going up, but my portfolio is not going up, which is the standard narrative that happens.
Atul, good to speak to you as always. And 2010 to 2013, I witnessed that. But you lost me on the previous one because 2002, obviously, I wasn't tracking.
There are some kids. There are some new kids in the market.
But Atul, give us a couple of, you're telling us themes, leaders that you're looking at as well, maybe from the cap goods, the industrial space as well. Right. Is there an index you're looking at? I'm looking for levels out here, or a couple of stocks that you could share with us, which you're tracking closely, which are looking like, they could move up from here.
See, what happens is that the way indexes are available to us are pretty, pretty broad-based. Yeah. So what we've done at Marathon is that we've actually subdivided the market, the NSE 500 to 50 thematic indexes.
Okay.
So what I can tell you is about those thematic indexes and what they are throwing up. So even among cap goods engineering, it's a very big segment.
Right.
You'll find that electrical equipments, right? Now, you'll have to actually figure out now what is that. That's something very simple. Anyone can do. But you'll find that even in that, electric equipments is something that's doing very good.
Okay.
Then engineering per se as a sector. Remember, all cap goods is not engineering. If you take the subset of engineering, you'll find that that also is doing very well. So you'll find that there are some themes. But the important part is that most of these themes are pointing towards the industrials as a broad category.
Right.
And the same theme you are seeing out of the US also. If you go and look at 52-week highs versus lows yesterday, you'll find that half of them in the US also are industrials. So in a sideways market also, some themes are playing out. And as I said, that very often these tend to be leaders of the next bull market.
Interesting. Atul, what about the commodity space? We had a fundamental analyst who was telling us that things are looking up in China, maybe for the property market.
Sure.
And that's why some of these metal-related stocks did well.
Yeah.
What's your view out there on commodities on the whole? Any particular commodity you're tracking?
No, I look at commodities very closely because they're very correlated with inflation and bond yields, which is the mother of all, signals of the market. So what we saw that a few months ago, that commodities actually all broke down. If you see crude, it went, let's say Brent, that matters to us, that went to 70.
Yeah.
75 was a base, it broke down, the CRB index broke down, a lot of things, and it thought that that's it, the end of commodities. But all asset classes get very oversold, overbought.
Yes.
When they get very oversold, which we saw in the case of commodities, leads to a pullback rally. So crude from 75 just came up to 85 due to OPEC action and all. Those are stories. That, you'll always have some stories to fill the narrative or to justify the price. The same thing we are seeing in metals. So it was due that a very oversold asset class has to see a pullback. The issue that comes up is that are they starting a new bull market? If that happens, we've got a problem, boss. We've got a serious problem.
So, I have a question on the overarching theme which we discussed, right, at the start. Of course, trends and all of that, sectors are fine. But if this market, if global markets head into a recession towards the end of the year, then are you looking at the possibility of resuming the lows that we saw last year, or has that been ruled out entirely on the charts?
I don't think it is. See, nothing is ruled out. But the fact is that even in the consolidation that we're talking about, you will find that the S&P and all are making higher bottoms. A higher bottoms is always a very good, when markets, like see India, since Jan, we are making lower tops. In the sense that, each time we pull back, 18,800, 18,200, 17,800, now we are getting there. So that is the nature of a downward sloping trend. But in the US, etc., you'll find they're making higher bottoms. That's why global markets are relatively outperforming India. So that sort of base. So you cannot rule them out, but always higher bottoms gives you a sign of confidence. And so there are things like recession. Now, is it a deep recession, elongated recession? How will the Fed pivot? There are huge amount of variables to it. We can, as I said, fill the narrative. We can do the storytelling. But if you really look at the market, you will see that in the last 3 to 4 months, the US has making higher bottoms. The breadth is improving. Even tech as a sector, which was the Achilles heel of the market, you'll find it's repairing. Even in India, if you see, some mid-cap tech stocks are doing phenomenal. So I feel that these are all interesting themes. Nothing overarching, painful, excruciating, but in that also look at silver linings. And in simplicity, if you want to summarize it, look at 52-week high versus 52-week lows. You get clarity on that.
Where else in this subsectors? Electrical equipment is one you said. I mean, industrials largely, but outside of that, where else, Atu?
Again, auto ancillaries. We like to look at auto names. We look at auto numbers, etc. The big 3, 4. But if you look at ancillaries, Prashant, there's a lot of interest happening there. Even in that, if you drill it down to those linked to electrical mobility, you'll find that those stocks are actually also doing well. So you will have certain themes, they're micro themes, they're playing out. But I guess the screen, the markets, and then we have result season coming up. So all these things will ultimately get cemented because wherever the results are not there, those stocks will give it away. But if you start even seeing results, then I think you've got a wonderful picking for your portfolio.
As they say, there's always a bull market somewhere.
Absolutely.
You just have to find it.
Absolutely. Money never sleeps.
Which has been a hard find in India, right? We've been looking for the bull market for a very long time. But Atul, pleasure speaking with you. Thanks a lot for joining in.
Thanks, guys. Thank you for having me.
Have a good one. Since you spoke about autos, we want to take that theme forward because, we have one of the largest players in the market. So CNG prices have fallen over the last many days, and that has, of course, the prices have reduced by 8 rupees per kg. It's a positive boost for Maruti CNG passenger vehicles. So to decode how this price cut will impact the sector and the company itself, we have the management, Shashank Srivastava, who's the Senior Executive Director, Marketing and Sales at Maruti, who joins in. Mr. Srivastava, good morning and thanks for joining in. So CNG prices have fallen. Can you tell us on the industry as well as a car manufacturer like yourselves, what would the impact be?
Well, first of all, the positive impact, I believe, would be the penetration of CNG vehicles in our portfolio should increase. And I would also imagine the number of inquiries and the bookings, which are the demand parameters that the industry tracks, should be very positive for CNG. And I think that's largely because the running cost with respect to the gasoline or diesel vehicles will come down with the reduction in prices for CNG. And the running cost would probably now be around 2.7, 2.8 rupees against a 4.8 or a 5 rupee for a diesel or a gasoline vehicle. So the running cost comes down, obviously renews and strengthens the interest of consumers in CNG vehicles, which should reflect in increased bookings and inquiries.
Okay, interesting. So you're saying that the running cost now will come down quite a bit compared to other vehicles. So CNG vehicle, the running cost will come down to 2.8 rupees, right?
Per kilometer, yeah.
Oh, okay.
Mr. Srivastav, what has been the growth so far in FY23 in CNG vehicles, and how much market share do you currently have in the CNG space?
So if you look at the passenger vehicle industry last year, that is 2021-22, was about 290,000. And out of which Maruti Suzuki roughly was about 234,000. But 22-23, that is the last financial year, this increased to 435,000 for the industry. And for Maruti Suzuki, it increased to about 329,000. So that was a jump of more than 50% last year as well. Thanks to, and this is despite the increase in CNG prices, since June of last year, which reduced the gap between gasoline diesel prices versus the CNG. Despite that, we saw this huge increase. And that's also, of course, because Maruti Suzuki introduced many models in the CNG in addition to what they had in the previous year. And for us, the market share in the CNG market is about 75%. And in our portfolio, the penetration of CNG vehicles is now close to 21%.
Okay, so 75% market share is what you're sitting on in the CNG market. Got that. You said that in FY23, the number of CNG units sold was about 329,000. How much could that rise to in FY24? What kind of growth are you looking at?
So for the next year, that is 23-24, okay, the current year, 23-24, the projections for Maruti Suzuki for CNG is roughly between 4.5 to 4.7 lakh. So that's a substantial growth over the existing 329,000 that I just mentioned. And I think after that, of course, because of the base effect, the growth will plateau because the very few models will remain where we will not be offering CNG. Currently, we are offering 14 vehicles out of our 17 models with CNG. And going forward, we are looking at projections up to anywhere between 600,000 to 700,000 units.
Oh, so 329,000 in FY23, but the projection is 600 to 700,000 units. What is the timeline? Which year are you looking to achieve it in?
So it will take a couple of years, actually, because next year we are hoping to achieve that 4.5 to 4.75 lakh range. So it really depends on the fuel prices, especially not just the CNG prices, but the gasoline and the diesel prices. So if you see an unusual spike in the gasoline prices, that obviously works in favor of the CNG. However, a dip in the prices for whatever reason in gasoline or diesel prices makes the gap with the CNG a little lesser and therefore is a negative for CNG.
Mr. Srivastav, any more launches in the CNG space you're looking at?
So we have just 3 more models where we don't have the CNG. So depending on the market response and our assessment of the market, we will look at whether we can introduce the CNG in the other models as well. But of course, apart from the difference in the running cost, which comes primarily from the difference in the fuel price of CNG versus the gasoline and the diesel, the other thing is that the penetration of CNG in terms of the number of retail outlets, the pumps itself has been increasing. So this, for example, in 22-23 March, last month, the total number of CNG stations in our country were 4,709. But this is going to increase to 8,750 next year, and the year after to beyond 10,000. And that is, of course, one other stimulant which is there for CNG vehicles, because one of the barriers to CNG adoption so far has been the long queues at the pumps because of the paucity of number of pumps. And now that is getting removed. In fact, in the next 2 years, there will be more than double the number of outlets that we have today. So that's again a very positive stimulant for CNG sales.
All right, just want to confirm that, sir. You're saying that CNG pumps will double in the next 1 year?
That is in 2026 March, you will have more than 10,000 pumps. So that's how it's more than doubling from the current numbers of 4,710.
Oh, wow. So more than 10,000 pumps, which automatically means that the penetration will rise in the CNG market, right? Earlier you mentioned that the penetration is about 20%. How much could it rise to, you think?
So it could be as high as 30%. In fact, next year itself, it should be close to 25%. So in the next 2-3 years, it could go up to 30%. And again, that all depends on how the fuel prices, pan out for gasoline and diesel, as also the CNG.
Let's end with one concern that the street has on the small car segment. Mr. Srivastav, Goldman Sachs, a sell-side broker, has downgraded the Maruti stock due to concerns about the growth in the small car segment. What are you seeing incrementally on the ground, and what is your expectation there in terms of growth?
Yeah, so if you look at the last year figure itself, we had seen in the small cars a jump of almost 20%. The small cars hatches segment ended up with about 13.5 lakh vehicles against the total volume of 39 lakh. The previous year, by the way, the hatches were just 11 lakh 40,000 or so. So there has been a big jump in the hatch sales of last year. But, I did read the Goldman Sachs report, and it's also, I tend to agree with that report a lot, because, one of the reasons why the small car segment has been declining is on the affordability factor has been coming down. The prices in this segment have been rising faster than the income levels of the consumers of this segment. And I think it will depend a lot on the economic growth and the income level growth for these lower end segment. If that happens, of course, we can expect the segment to grow. But the chances probably look as if the prices probably will go up faster than the income levels. And that is why those projections for the small car. But for us, next year, we have said this segment will be around that 35% mark, which it currently is of the total PV industry.
Okay, all right. We will leave it at that. Thanks a lot. That's a big move in the CNG market. Of course, CNG prices have fallen, which means that CNG vehicle demand will go up. And that's Maruti speaking about how penetration currently from 20% will rise to about 30-35% in the near future. Let's slip into a quick break on that note. On the other side of the break, we'll connect with Itira Davis, who's the MD and CEO of Ujjivan Small Finance Bank, to discuss their Q4 numbers. Later, we have our favorite Quarter Se Quarter Tak segment. Ekta will analyze the expectations from the pharma sector in Q4. We will also be joined by Vishal Manchanda, who's the pharma analyst at Systematics Group, to discuss expectations from the pharma space. Stay tuned.